we've seen this 100 times before, is when the market has no buyers, market makers recycle the same risk.
Yep.
And they have to keep dumping at each other on lower and lower prices, right? So whether it's you guys, it's just the market in general had no buyers, so nothing cleared. All of these people were farming, hoping for the future token, of which they don't know what the value is. They kind of mark it on the previous token price, and the token price just keeps going down. I'm guessing at the end of all of this, they're creating a bit of a death spiral of the token, and everybody's is going to lose money, and that liquidity is probably going to dry up because that incentive ended up seemed like a good idea to start with, and then as ever with incentives, you're not careful, they become perverse incentives.
In the digital realm, the boundary between reality and virtuality is increasingly blurred, raising questions about the impact of AI on the value of non-fungible tokens. NFTs, once seen as revolutionary for authenticating and monetizing digital art, have experienced a significant drop in prices and ownership since 2022, leading to concerns about their sustainability and worth. Simultaneously, the rise of AI-driven art creation has democratized the process, enabling anyone with a computer to produce unique artworks. This explosion in AI art has led some to wonder if it has inadvertently devalued NFTs, as the ease of creating one-of-a-kind art diminishes the exclusivity once associated with these digital assets. The ownership rights of AI-generated art add another layer of complexity. Questions persist about who owns the rights to these creations, the programmer, the user, or the AI itself. Such uncertainties cast a shadow over the AI art world, leaving ethical and copyright concerns unresolved. In this context, Raoul discusses the NFT ecosystem and digital AI art, offering insights into these pressing questions and the future trajectory of the digital asset class.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
One of the things I've been thinking through with NFTs, and again, no surprise to you, but to other people, I think people need to think this through more, is assets within an economy, particularly status assets or excess discretionary spending assets in an economy, suffer when the economy shrinks. So we've seen it with houses in the meat space. We've seen houses, Rolex watches, Patek Philippe's, are pretty much everything. As the economy shrinks, less consumer spending, and less recycled gains. So people aren't making any money, right? Everybody lost money last year in every single thing that they touched. So therefore, nobody's buying stuff, and you're certainly not rewarding yourself with a new Rolex because you've made a lot of money. So that seems to apply for the ETH economy as well, in exactly the same way. And we also find that assets tend to lag the business cycle somewhat. And so I've been observing this. Obviously, ETH was the first to bottom. You and I were pointing that out back in June of last year. ETH bottomed, rest of crypto bottomed, and then NFTs feel like they're bottoming now. You know, we're in that process of market clearing prices. And what was amazing, as I wrote about it in GMI, the chart of Rolexes and Patek Philippe is the same chart as Bored Ape Yacht Club.
It really is, huh?
Because it's almost the same buyer, right?
Yeah.
It's the same buyer with the same thing. And so, you know, when we're looking at the ETH economy now, it looks like it's starting to grow and come to life again. So I just look at this and think, crisis opportunities in NFTs. The issue is in what? Because all the good stuff, right? Art, just, you know, if we're looking at the ETH basing before Bitcoin moment and didn't hit a new low, it's the high end of the art market, right? It started decoupling and didn't fall. Some stuff, NFTs that are tied around kind of memberships, that's still interesting because you get utility, you know what you're getting. There are NFTs that have no utility, nothing else, like Red Guy or Crypto Dick Butts. Do they become iconic memes in the next cycle? Who the fuck knows, right? So it's very hard. The other thing that I'm observing is the rise of new AI art. You know, I'm obsessed by the Rupert Ernesto Life in West America. It's like,
incredible.
It's striking, right? It's amazing. Yeah. And then we're seeing some of the video format stuff as well. And how I get around that is if I buy something like that, it's because I really like it. So I don't really give a shit if it goes down.
Yeah.
It's different if they start trading at, you know, huge prices, but, you know, they're still at reasonable-ish prices. It's got to augment their creativity and not be their creativity. So like, again, the Life in West America, it's kind of like X copies glitches. It's like a glitch photograph of this photorealistic, surrealist world. And it's like, that's cool.
Yeah.
It's just cool because we hadn't seen anything like that before. Like X copy, and his glitches. There's, it's very interesting to see where some of this stuff is going, but it has to enhance the creativity. They have to be using it as a conduit and not it being the creativity.
In the realm of Web3, the NFT marketplace and aggregator Blur have shaken up the landscape significantly in the past year. Starting in November 2022, it began to rival OpenSea, the previously dominant NFT marketplace, and by February 2023, Blur outpaced OpenSea by as much as $400 million in weekly trading volume. Airdrops rewarded platform loyalty and user engagement, driving continued interaction with Blur through promises of more airdrops to come. In May, Blur introduced Blend, a lending protocol aimed at unlocking liquidity, further incentivizing users to engage with the platform. However, some observers question whether Blur's success comes at a potential cost to the broader NFT ecosystem, as high trading volumes are often driven by a few traders wielding an outsized influence over NFT prices. BitGet, a crypto exchange, has announced its impressive reserves of $1.44 billion, with a reserve ratio of 223%, well above the industry standard of 100%. The exchange's substantial reserves are derived from profits from transaction fees, returns from investments, and acquisitions, leading to a debt-free status. Meanwhile, the Bitcoin price has surged to $30,000 per Bitcoin, boosted by bullish predictions and the approval of U.S. spot Bitcoin exchange-traded fund filings, signaling a potentially optimistic outlook for the entire crypto space, including digital arts. As the Ripple case with the SEC ruled in favor of Ripple not being classified as a security, optimism returns to the crypto markets, with some hopeful for the beginning of a long-awaited bull run. However, opinions vary, and some remain cautious about potential market traps. The comment section awaits your thoughts on whether we are already in a bull market or treading carefully. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.